Alrighty. I want to just talk a little bit about something else here that, again, a lot of times we try to isolate what's happening today. You know, this made the market go up, this made the market go down. Bottom line, ladies and gentlemen, I feel very comfortable explaining this to you. It's pretty simple. What makes the market go up is more buyers than sellers, okay? That's the way that works. Now, what motivates the people to be buyers, it's a rash of all kinds of different decisions, all kinds of different modes, all kinds of different, oh my God, you don't have no idea what they'd be thinking, right? So here's what I wanted to talk about today, and that's hedging, all right? Because a lot of times people are looking at gold, looking at silver, looking at platinum, looking at palladium. Look at this palladium 1 year chart, all right? This palladium just a year ago was less than $300 an ounce. It hit over $720. From 3 to 700 in just a year. All right. Now again, the reason I talk about these markets because most people don't. All right. But to me, I just like this guy Jason here, good caller, has been listening to the show. I mean, he can't be unhappy with that type of purchase. Just can't be unhappy. I just can't see you being unhappy. All right, now, the one thing that I talk about these markets is that obviously there's a time to buy, there's a time to sell. And so you have to follow miners, all right? These are the people who dig this stuff out of the ground. You know, there are stocks out there. There's so many derivatives it drives you crazy. But there are companies out there that their company doesn't mine the gold. All they do is own the ground where they believe the gold is. They never mine the gold. They just own the ground, waiting for that killer time. And there's one of them, I can't remember the name here, Stride, something like that, like a 50 million ounces of gold that's in the ground. Open trade stock. You know what I'm saying? It's all on what they're going to take out, but they've never taken it out. That's how paper is so manipulated. That's why these commodities, in its sense, the whole gambit, as I said in the beginning of the week, not to get discouraged because of the unwinding of the trades. That's all that was going on. You got to remember, all these contracts have liquidation dates. And the December contract is huge. Look at the dollar. Look how the dollar's getting beat up, and look how strong it was a couple of days ago. It wasn't because the dollar was getting stronger, just because people had to get out. The contract was coming to an end. And if you're long, which is a buy, you got to be short, which is a sell. If you are short and you're a seller, to get out, you got to be a buyer. That's pretty simple. That's all it really went down. And all this unwinding, all the corn, all the sugar, all these contracts were coming to an end, and all these people needed to get out. But as you see today, and as you can see, the market now is continually moving up because the dollar is starting to move back down again. So again, let's go back a little bit and just think of where it was 30, 40 years ago, okay? Even as a kid myself growing up in Brooklyn, New York, what was my parents telling me, all right? What were they telling me? Get a stock portfolio? Make sure you get a good bond portfolio and get yourself. Do you really think that my mother or father were telling me that? Come on now. I'm only going back maybe 40 years ago, 45 years ago. And the whole neighborhood, any of those parents, how many were saying, get yourself a good stock portfolio? All right? Now, where I came from, back in Brooklyn, New York, all right, there wasn't that type of thought. What they were telling you to do was to save. Just save. All right? Just save your money. Nobody had the anticipation that there was going to be Social Security that's going to keep your life above float. It was save your money. That was the key. Save it. It's all changed.